Thank you for tuning in to another InterWeb Highlight.
Too many times I've seen a gap in insurance cause an insured not to have coverage at the time of a claim. Most financial services professionals will admit that they either don't know what a gap is or they don't know how it will negatively affect them. On occasion, I've had people tell me that they didn't think they had to carry E&O coverage when they weren't writing new business. But when an E&O claim sneaks up on them from something they've done in the past, they realize how wrong that thinking is. I felt it was crucial to have this conversation and better educate you on E&O insurance, what a gap means, and how to better protect yourself and your business that you've spent so many years establishing. Let's start with the basics. What is a gap in insurance, also known as a lapse in coverage? It's the period of time from when your previous policy expired to when your new or renewed policy becomes effective. For example, if your previous policy expired on, say, January 1st, 2015, and your new policy is effective January 1st, 2015, then you do not have a gap in insurance. What you do have is continuous coverage. Why is continuous coverage important? Well, because E&O policies are claims made and reported policies. And what that means is that you report the claim to your current policy that you have at the time of the claim. You do not report that claim to the policy that you had when you provided the professional service or when the error occurred. Let me give you a brief scenario. Let's say you sell a life insurance policy to one of your clients. We'll call him Joe. So you sell Joe this life insurance policy in January of 2009, and in January of 2015, Joe sadly dies. His beneficiary, who is his ex-wife, we'll call her Sally, receives the $100,000 that Joe intended for her to have. But Sally didn't like that. She wants the $1 million that his new wife has. So her new misfortune is now your fault, the agent, because you must have made a mistake. So Sally sues you. Whether it's a legitimate claim or not, you will have to defend yourself, and you will want your E&O to pay for that defense. The only way your current policy will even consider providing coverage for that claim is if you had coverage at the time you sold the life insurance policy, in this case 2009, at the time the claim is made, 2015, and all that time in between continuously without a gap. I can see the wheels in your head turning now. You're thinking, is she telling me that I have to carry E&O coverage throughout my entire career without a gap all the way into retirement forever? Yes and no. If you decide to retire, you will want to purchase something called an ERP or a tail, but that's a whole nother video, so we'll get into that later. If you're not going to retire, then the answer is yes. You do need to carry E&O throughout your entire career without a gap in order for there to be coverage. When you have a gap, your E&O essentially starts over. When you pick up that insurance again, now you're only being covered for things going forward. You're not covered for things from the past. Do not allow your E&O to lapse. One more thought on this topic. Some E&O carriers will allow a 30-day window to backdate coverage, and if you've recently expired and you're within that window, I would suggest finding such carrier or getting a carrier to give you all prior acts coverage. I hope you've enjoyed this video and found it helpful. Until next time.
Thank you for tuning in to another InterWeb Highlight.